Good afternoon, YouTube and ride sharing economy contractors. I'm here to introduce myself on my first episode of Tax Tuesdays. Now, Tax Tuesdays, I'm going to give you valuable information to help you with your tax return and your ride sharing economy business. Now, let me give you a brief introduction about myself. My name is Teresa Smallwood. I live in the metropolitan Atlanta region or metropolitan Atlanta suburbs. I live in Stone Mountain, Georgia. I've worked for the Internal Revenue Service for 10 and a half years. However, I have over 20 years experience of taxes. I first began my career at the IRS when I first moved to Atlanta in 1996. And I worked for a couple years, and then I transitioned to another career between several years, and then I went back to the IRS in 2006, and then I recently left in 2016, the middle of the year, because I wanted to pursue other career aspirations, and also I wanted to it was time for me to move on. However, my passion for business taxes still holds true to my calling, or one of my passions, I could say. I have an MBA degree from Capella University, and I have a bachelor's degree from the University of South Carolina. And also, my educational background also included advanced tax law, which included forensic accounting, cost accounting, managerial accounting, and advanced federal taxation. So, with my experience with the Internal Revenue Service and my educational background, I have the qualifications and the skill sets to speak on tax returns as well as dealing with the IRS, having that I've worked for the Internal Revenue Service for several years. Now, let me tell you the brief reason why I decided to do this series of videos. One is, as an independent contractor myself for Uber and some other companies, I know the tax implications as a independent agent, independent contractor rather. And because of that, I know many of the rules. I know the processes in which the IRS audits returns, review returns, correct returns, and how to prepare a return. And when I was with the IRS, one of the things we were not allowed to do was to work another job unless you got approval from labor relations to work another job or operate your own business, any type of business, because we already know what the inside scoop is, you could say, with the IRS. So when I branched out on my own and finally left the service center because it wasn't, it was just too much with the IRS, I could tell you that for sure. But anyway, that's basically what my experience is about. I also made this video because when I was reviewing a lot of y'all videos, and a lot of people who speak about, oh, you have to pay taxes, and when you're an independent driver and you don't make as much money, and by the time they take out taxes, you're only making $2 an hour, and you put wear and tear in your car, and etc., etc., and etc. But you know what? Small business is what drives this economy. So as independent contractors who works for a big billion-dollar corporations such as Uber and Lyft and Airbnb and these other companies, we are a catalyst of extension of those companies, even though we earn extra money on our own, and you know, you're independent contractors nevertheless. Now, so for all those who has so much to say about depreciation and what your true income you're making and all those things, and you got to take out taxes, and you end up owing at the end of the year. Let me tell you the reason why most people owe taxes. The reason why most people owe taxes is because, one, they're not paying, well, let's put it this way. If you're a W-2, meaning you work a regular job and you don't have no side hustle or a side gig, and you owe taxes because of a simple thing, not withholding your withholdings and doing it correctly. Plain and simple. Most people who are single, they have no dependents. If you owe taxes, it's because of one simple thing. Your W-4 is wrong. And it's a matter of simply choosing the correct deduction, whether you claim 0 or 1. If you file your taxes and you claim yourself and you don't have no other expenses other than a simple W-2, the answer to that is let's claim 0 or 1. A refund is only thing a refund is that you overpay taxes throughout the year. That's all what a refund is. That's all what a refund is. You overpaid in taxes throughout the year. Now, let's speak about what my purpose is for these videos and what I will be guiding my topics on. I'm speaking on topics, and I'm going to back it up what the publications that the IRS goes by. They go by the Internal Revenue Manual. They go by the interpretations of rules that Congress had passed, which allows what the law says. The IRS is simply an agency that collects on the taxes. They process returns. But in terms of how that is done, is determined by tax codes, tax laws. Now, I'm going to tell you now, as an employee or a former employee of the IRS, or agent rather, those tax rules and codes are very complicated. It's not written in plain English. It's not simple for people to understand, even if you worked at the IRS. Another thing is, as a taxpayers, we also have to understand that tax laws and tax rules is very extensive, and it could be very complicated. But it doesn't have to be complicated. And it all starts with planning, tax planning. Now, it's October 25th, and taxes will be due April 15th, or the legal holiday of the following year. So we don't wait until April to run to the tax preparing firms and your accountant and just hand them a whole bunch of receipts, a whole bunch of information, and say, okay, do my tax return. Because number one, if you do that and you're not organized now, come next year and you say, well, why do I owe? It's because it's planning. You have to plan and get organized. Now, let me go ahead and tell you some of the things that you could go to to prepare yourself for next year. Now, number one, the tax season is going to start February the 18th, or whatever that following day after Martin Luther King's birthday. because Martin Luther King birthday, as all of us know, is a holiday. But the day after MLK's birthday, that's when the IRS is officially open for the tax season. You don't get a W-2, you don't get a 1099 in January. Now, some companies prepare electronically the 1099s and the W-2s, but most companies has to file their 941s, and therefore they're not going to have the 1099s and W-2s probably until February. But the tax rule is that companies and organizations such as Uber and Lyft, they have to prepare that information by the end of February. That's when they are obliged to issue those 1099s in the month of February. Now, some of them may have them in January, depending on how they have their system run, and you may have it available maybe January. But the rule is no system is updating until the new tax season, which is going to be the end of February, and that's when the IRS runs its systems. The systems updates right about December. So the whole month of December, January, the IRS systems are shut down because it's updating. So that's when they start doing all the programming of their systems, all the any type of information. If you have information and you need to call the IRS about an issue from any previous tax year, and you call, let me tell you, they're not going to be available and discussing any type of information, and most particularly in December. So don't call the IRS in December, because one, the systems are going to be updating all the way until next year, and they're going to be very limited. And two, the IRS is now going to be referring people to the irs.gov website for any kind of questions, tax law questions, status of return refunds, balance due issues. So rather than calling that 800 number, because I work the 800 number line, 1-800-1040, 829-1040, they are so overwhelmed with calls and people calling in that they're not going to answer a lot of these topics that I'm going to be going over with throughout these several months. They're not going to be available to clarify or to distinguish between what can I do and why did I get this letter, because they're going to tell you to go to irs.gov point blank. So rather than waiting on the phone for an hour, 2 hours, and sitting on the phone and going to the tax office just to sit in line with a whole bunch of people waiting, getting mad and frustrated, they want you to basically take ownership of your own records, your own responsibility of knowing what the tax rules are. Now let's bring up to my second point. If you choose to go to a tax preparer, now if you go to H&R Block, Jackson Hewitt, they're only going to put information in the system as what you give them. So when you come down with your W-2s and the 1099s and the Schedule Ks from Uber or Lyft or both or all these different companies, they're just going to plug that number in and you're going to get a end result of owing. And most people owe is because they don't have proper planning. They don't keep records. They don't keep adequate information. And it doesn't require any fancy app to do that. Oh, let me keep track of my mileage on this app. Okay, that's good. But you know what? Standard deductions on the mileage versus itemizing the deductions that's allowed, you're always going to lose if you choose to do the standard deduction for the mileage, because it's limited. Everything that you do is limited. You're not going to be able to take the entire deductions on all this equipment, office equipment that you purchase for your studio, and say, well, all of this is deducted. No, it's not. I know you heard some certain people on YouTube who mentions that they give out this, this purchase, I purchased all these equipment, these expensive equipment, and I use this in my home office, I could deduct that. No, no, you can't. Now, let me go ahead and give you some points. And because this video is getting long and I'm still trying to learn the software to edit the videos and things of that nature. So forgive me if the videos may not be as lucid, but as the months go by and I get experience doing videos, then it will get a little bit better. So number one, on this first episode of Tax Tuesday, you want to, is go over record keeping. That's the first thing we need to focus on, record keeping. Now, before the holidays begin, Thanksgiving, Christmas, New Year's, and we all try to do our record keeping after that, it's going to be hard to track and keep track of what records you may have. So one thing you want to do is get the publication 17 and get the publication 525. Publication 17 is basically for this all tax topics and issues. 525, that deals with tax withholdings and payments and things of that nature. And then there's also the publication 587. Now, those are the three main books or publications you may want to obtain. Just get them. You don't need to read every page and try to do the return. But if you get those publications, it will allow you to gather what information is needed. Now, let me first give you some big tidbits for record keeping. You want to keep your records for at least 3 years, 3 to 5 years. You want to keep those records for that length of time in case you get audited. Now, let me tell you about audits. You don't get audited. So let's say, for instance, you have your business this year and next year you file your tax return. The IRS is not going to audit that return next year. That next year's return is not the one that's going to usually be audited. Now, it may get flagged because if you have a huge, large deduction, because they have a certain limit, and the computer will pick that up, they will then ask you for the information to clarify certain deductions. And that's when you want to keep the records. You could keep your records in several different ways. And it doesn't have to be some fancy app or some fancy device, because let me tell you, the IRS is just going through its modernization, and it's going to take at least years for them to do that. But right now, a lot of the work is conducted by individuals. So when they ask for receipts and papers and documentation, they actually going to ask you for the actual paper. It's paper. They still working with paper. They don't have a fancy computers and software and devices and all that stuff. They don't. All that stuff is examined and reviewed in the mail. It gets processed through the mail. Someone scans it. They literally have clerks who scans documents. And they, so it's not that sophisticated. So as we try to keep our records with apps and all these little fancy things, you hear people say, oh, just keep all that. For one thing, those are companies that's trying to make money because they feel that, for the compliance with the IRS, we could do this app and we could keep track of our miles and how many, business miles and personal miles, and all you do is download this app. That's just an app. That doesn't mean squat diddly for the IRS. Because you know what? If you download those apps, all they see is, someone like to say, oh, we have a digital footprint of record keeping. Now, okay, that's cute, but when it all comes said and done, is a lot of those things does not really substantiate what they need to audit. So what I tell you to do is, one, make sure you keep and be organized in your record keeping. The first thing you would do is check your W-2s if you're working a W-2. Simply change the W-2s. If you're single with no dependents, you no longer have all those dependents to claim, to lower your taxes. Simply do 0 or 1 on the W-4. On the W-4. 2, if you're working all year round doing Uber or Lyft, whatever you make a month, set aside that amount of money. That's the easiest way for me to tell you how much you should set aside. So if you make $1,000 a month, 3 of those months, which is $3,000. So you should have something in your mindset that, okay, I need to make sure I have $3,000 set aside. And $3,000, that numbers comes from basically that out of 12 months of the year, 3 months is usually going to be taxes. That's about 3 months of tax. Now, I'm not going to talk about the state tax because some people may live in a state that there is no income tax, state income tax. And that's not something I'm going to address. I must focus on the federal because the state tax rate is usually 8-10%. So it's not that much versus the IRS, which is 23 to 28%. And then the next rate of bracket goes to 30 to 33%. Give or take some numbers. But don't hold me to that true figure. So what I'm saying is the first thing is record keeping, and just keep it, put it aside. You go to the gas station, put it in a binder. That's what I do. I have a little manila binder that I got from the Dollar Tree, and every time I go to the gas station and I get gas, I put it in that little binder, and I have all these receipts. Now, as for the mileage, I don't keep track of mileage because number one, I didn't work 12 months when I started doing Uber back in June or July or whatever month that was. So I already know that the itemized deductions I'll be able to take, it's going to be way more than me trying to figure out, me take the mileage, because there are other things that I could factor. Number 2 is keep a diary. Nothing fancy. Just keep a regular book. Now, this is an Audacity book when I went to take some courses. Just take a little book like this, and you want to write down your dates. You want to put down your schedule. Or what I do also is I go on Google Calendar and I put down I'm going to ride for Uber or Lyft or whomever you work with or driving with, and you put down how many days, the days you worked or you drove and the hours. And then you put it on the calendar, and you could go backwards and just put those dates in and put it in a calendar with your schedule. Also, I want to include is go to the irs.gov website, and then there is a specific area depending on your business. Now, in this example, there's a link that specifically goes and speaks about the Sharing Economy Tax Center. It's on the irs.gov website. You go to small business. There's a tab that says small business. And you click on that. And then on the left hand side, I wish I had a way of knowing how to pull this up on the video, but I'm going to figure this out soon enough. I'm gonna figure this out soon enough. But anyway, you go to Sharing Economy Tax Center, and when you click on that link, it gives you a whole lot of valuable resources. It speaks about the different publications that I've told y'all to obtain, and you could get that publication. You could get it. You could ask for it to be sent to the mail. They don't have any publications at the Krogers and the post office where they used to have it. We used to go to the post office and you see all these publications and all the tax forms. They don't have that anymore. That has been eliminated due to the budget constraints, and then a lot of things are online. So don't try to look for a book at the post office. Don't try to go to you go to the library. The library may keep those publications from previous years, but there is no publications to get at the library or at the schools or whatever. So those publications are not going to be available where people could just go and pick them up like they used to. That they've done away with that, I would say probably 8, 9, 10 years ago. So everything is going to be on the website irs.gov. And go to Sharing Economy Tax Center and get those publications. Pub 17, Pub 525, and the Pub 587. I'm going to focus on those 3 main publications in my tax series for Tax Tuesdays. So first thing we're going to talk about, and I'm going to end this video in 30 seconds, is one, record keeping, and just focus on just getting a simple book and Google Calendar and put your dates and the dates you worked and drove and just put it on your calendar. And then gather any all your records, like your phone bill, cell phone bill, and your cable bills, or anything that you could get, even if it's electronically, print them out and obtain them. And then also get all your statements from Uber and Lyft and just print those out. So what you're going to do is when you print all that out, we're going to go over the forms you need to obtain. So right now, don't focus so much on how much you should have paid in estimated taxes, because estimated taxes should have already been paid September 15th. The next payment, if you make estimated tax payment, is going to be January 15th of the following year. So if you haven't been making any estimated tax payments at all this year, and you don't know if you're going to owe next year, let's focus on what to do to lower your tax rate and make sure that you have all proper tax credits that are due to you. So don't listen to those people who like to say, well, they don't take any taxes and you're going to owe taxes. Let's not focus on that. Because I'm going to tell you, 80% of tax accountants, i.e. H&R Block, Jackson Hewitt, and even tax accountants, most of the errors they make as well. And a tax accountant is only capable of doing your tax return properly is what you give them in the first place. So if you don't have all your information together, and you don't have anything, and you go into the tax accountant and say, I'm gonna let them handle it, they only gonna add and subtract what you give them. So if you don't give them everything, they're not gonna ask you, well, what you got here, what you got here. They're not gonna do that. Most accountants handle large, huge businesses, big accounting firms. They handle more corporate. A small person who handles taxes, when tax season come around, I could tell you, they're overwhelmed, and their purpose is to turn around and get that tax return done so they could get their money. So they don't have time to decipher and look through all your papers and try to figure out what you did or didn't do. That is our responsibility. We don't have to know the tax laws and the tax rules. I mean, I know it because I work there. But record keeping is what you need to get and establish. Make sure you keep those records 5 years, and depending on the deductions, if it's a mortgage or a house, you keep those records until you sell your home. That's the rule of thumb. So anyways, I hope this is valuable, but leave your comments below. Any suggestions? Oh, I got milk on my face. Any suggestions will be kindly appreciated. And please comment on my videos. I've commented on a lot of your videos, and I don't hardly get any comments on my videos, but it would be appreciated if you do it and reciprocate it in return. So y'all have a nice one, and I will improve on my video skills and not make this as long. Talk to you later.